if their income is above rupees 10 lakhs, they will have to pay 30% tax. Hello everyone, welcome back to my channel. I am CA Isha Jaiswal and today we'll be diving deep into the topic that impacts every taxpayer in India. The income tax slabs for the financial year 2023 to 2024 or the assessment year 2024 to 2025. We'll cover both the old and new tax regime, compare the tax rates and highlight the key changes you need to know about. So let's get started. If you're new to this channel, don't forget to subscribe to this channel and hit the bell icon to stay updated with all such videos. In India, income tax is levied based on slab system, which means different tax rates are applied to different income ranges. This progressive system ensures fairness as those with higher income pay more taxes. The slab rates are periodically revised, usually during the annual budget in the month of February. For the financial year 2023 to 2024, the tax slabs are different under the old and new tax regime. Let's start with the old tax regime slabs for the financial year 2023 to 2024. For Indian residents aged less than 60 years and NRIs, if their income is up to rupees 2,50,000, they will not pay any tax. If their income is between rupees 2,50,000, 1 rupee and rupees 5 lakhs, they will pay 5% tax on income above rupees 2,50,000. If their income is between rupees 5 lakh 1 and rupees 10 lakh, they will have to pay 20% tax on the income above rupees 5 lakhs. And if their income is above rupees 10 lakhs, they will have to pay 30% tax on the income above rupees 10 lakhs. Next, we move on to Indian residents aged between 60 to 80 years. If their income is up to rupees 3 lakhs, they will not pay any tax. If their income is between rupees 3 lakh 1 and rupees 5 lakh, they will have to pay 5% tax on the income above rupees 3 lakhs. If their income is between rupees 5 lakh 1 and rupees 10 lakh, they will have to pay 20% tax on the income above rupees 5 lakh. And if their income is above rupees 10 lakh, and they will have to pay 30% tax on income above rupees 10 lakhs. Moving on to Indian residents aged above 80 years. If their income is up to rupees 5 lakh, they will not pay any tax. If their income is between 5 lakh 1 and rupees 10 lakhs, they will have to pay 20% tax on income above rupees 5 lakhs. And if their income is above rupees 10 lakhs, they will have to pay 30% tax on the income above rupees 10 lakhs. As you can see, the old tax regime offers different exemption limits based on the age of the taxpayer, with higher exemption for senior citizens and super senior citizens. Moving on to the new tax regime slabs for the financial year 2023 to 2024. If the individual has income up to rupees 3 lakhs, they will not be paying any tax. If their income is between 3 lakh 1 and 6 lakhs, they will have to pay 5% tax on income above rupees 3 lakhs. If their income is between 6 lakh 1 and 9 lakhs, they will have to pay 10% tax on the income above rupees 6 lakhs. If their income is between 9 lakh 1 and 12 lakhs, they will have to pay 15% tax on the income above rupees 9 lakhs. If their income is between 12 lakh 1 and 15 lakhs, they will have to pay 20% tax on income above rupees 12 lakhs. And if their income is above rupees 15 lakhs, they will have to pay 30% tax on the income above rupees 15 lakhs. Under the new tax regime, the tax rates are simplified and uniform for all individuals, irrespective of the age of individuals. However, the new tax regime offers a higher tax rebate for incomes up to rupees 7 lakhs, thereby making it super attractive for those taxpayers. Now let's talk about the rebates and deductions. Under the old tax regime, you can avail deductions under various sections like Section 80C, Section 80D, Section 80E, etc. etc. Here's a quick look at some of the deductions you won't be able to claim under the new tax regime. Number 1. Investments in Public Provident Fund or PPF. Number 2. Life insurance premium. Number 3. Principal and interest on home loans. Number 4. Tuition fees for children. Number 5. Medical insurance premium. Number 6. Donations to charitable institution. And the last one, interest on educational loan. However, the new tax regime introduces a higher standard deduction of rupees 50,000. This means regardless of your actual expenses, you can reduce your taxable income by rupees 50,000 automatically. Additionally, the new tax regime offers a significant tax rebates for the incomes up to rupees 7 lakhs. This rebate under section 87A ensures that if your total income is up to rupees 7 lakhs, your tax liability will become nil. So for example, let's say your annual income is rupees 7 lakh 40,000. Under the new tax regime, after applying the standard deduction of rupees 50,000, your taxable income reduces to rupees 6 lakh 90,000. Now, due to the tax rebate, the tax calculated on this amount would be completely offset, making your effective tax liability zero. This simplification makes the new tax regime particularly attractive for individuals with lower investment in tax saving instruments or those who prefer a straightforward tax calculation process without the hassle of tracking multiple deductions and exemptions. So, which tax regime should you choose? The new tax regime benefits those with lower investments in tax saving instruments, while the old tax regime is better for those with higher investments and seeking maximum deductions. I have prepared a calculator to quickly analyze which tax regime is better for you. Just WhatsApp me on 90077 53034 and I will send you the file. Important procedural changes have been introduced for filing your income tax return. For financial year 2023 to 2024, the default tax regime is the new tax regime. If you prefer the old tax regime with its deduction and exemption, you need to submit Form 10IEA within the due date, that is 31st July 2024. Missing this deadline means you file your return under the new tax regime. Additional taxes like surcharge and cess also apply based on the income levels. Surcharge will be 10% on tax for income more than rupees 50 lakhs and up to rupees 1 crore. Surcharge will be 15% on tax for income more than 1 crore and up to rupees 2 crore. Surcharge will be 25% on tax for income more than rupees 2 crore and up to rupees 5 crore. Surcharge will be 37% on tax for income more than 5 crore. This has been reduced to 25% in the budget 2023, especially for the new tax regime. Also, don't forget the 4% health and education cess added to your tax liability. That's a wrap on a detailed overview of the income tax slabs for the financial year 2023 to 2024 and for the assessment year 2024 to 2025. Remember, tax planning is crucial, so evaluate your options carefully and file your returns on time. If you're confused regarding which ITR form is suitable for you, I have already posted a video on the same and I'm leaving the link in the I button above. If you found this video helpful, don't forget to like it, share it and subscribe to our channel for more such informative content. See you in the next video. Till then, bye-bye.